Speaking of arguing, let's argue about commercial banking. We're going to get into some ferocious arguments about commercial banking. It's an exciting, passionate field of endeavor. Loaning money. All right. So how do banks expand? The doctor likes it. So to expand their market presence, banks have four options. They can charter new, in Latin de novo, banking companies. Brand new banks. Happens all the time. Brand new banking companies. Or they can build branches from the ground up. De novo. Again, new. For some reason, all the cool people in banking think that if you say de novo, that they're really in the know. All right. Or you could buy existing banks or branches. Buy instead of build. One thing you get by buying an existing bank or branch is time, speed. You can make things happen a lot more quickly by buying an existing asset than you can by having to build it from the ground up. Often, you can buy it more cheaply than you can build it. Okay? You can buy an existing piece of land with an existing building on it. It's already situated. Now, in the case of a Regions Bank over off of Race Street that they've been, or BB Caps that they've been renovating for the last 18 years, that's an exception. I don't know what's going on over there. You know that gray bank? Terrible. All right. Banks have pretty much run the gamut of opening up ATMs. They're everywhere. And of course, the latest for the last couple of years, the latest focus has been on the website mobile banking. All right, so I think we've said that like 18 times already, that mobile banking is the way everybody's going. All right. So you cannot start a financial firm without the approval of government authorities. That's everywhere. Everywhere. Okay? And, you know, that's really important, and I want to say this just because it popped into my head. When you hear the word CD, Certificate of Deposit, 99 times out of 100, that is an IOU that's issued by a bank. But every now and then, a non-bank entity will issue a CD. Be very, very, very careful and leery of a non-bank issued CD. They are not FDIC insured. And to make it worse, in order to sell the CD, the rate on it will be higher than the market rate. So it will lure in greedy and careless people. And then they end up losing their money. Shocker. All right. So, what do the regulators look at as they decide whether to allow a bank to expand? Well, is the bank needed? Okay? Is there enough demand, high enough demand and scarcity of supply to justify owning a bank? Because the regulators don't want an oversupply of banks because it will weaken the banks that are already in the market. And that's not what they want. It's not necessarily that they want a monopoly in the banking industry, but they want all the participants to be healthy. All right. And the stockholders who are proposing to found the bank have to commit and show evidence that they have the capacity to deliver adequate capital. If they're going to start the bank, then they have to have enough money to keep that bank up and running. They do not want banks to fail. And again, part of this process of supply and demand is showing projections that the bank is going to be profitable. And there is a cookbook way of stepping through this process to prove to the regulators that there are enough customers with enough money to sustain this bank. Okay? All right, so each state has a banking commission and can charter a state bank. Okay? Then the comptroller of the currency will charter national banks. We've gone over that before. Okay? So, generally speaking, the national requirements are tougher than the state requirements. And that is also true in the investment advisory business like mine. I have a state-regulated investment advisory business. Okay? And so, if you're thinking about chartering a bank, you're going to have to visit with or know yourself the rules and the differences between the national requirements and the state requirements to decide which is going to be best for you. Okay? What's going to put you in the best position to compete? Oops. Everybody up with me? All right. All right, so a national charter. So people in the market, both customers and investors, understand that the bank is going to be held to stricter regulatory standards. That builds confidence. They know that you're going to have to cross a higher hurdle and maintain better reporting and capital requirements in order to stay in business. Less risk. Okay? And then if a bank runs into trouble, either because of poor management or because of a poor economy, then they will get better assistance from the feds in terms of technical assistance and in terms of capital assistance than they would the state. Okay? All right, so it's always the case that the federal level has more resources, but they don't understand the local market as well. Okay? And typically they don't react as quickly. And they don't give you the benefit of the doubt because there's not a relationship there between the federal level and the local level. And you get all of those benefits from being a state chartered bank. Okay? You're on a first-name basis with the regulators. All right. Federal rules can take precedent over state rules if laws are made. And so, if you comply with federal laws, you don't worry about violating state laws. But if you comply with state laws, you often have to worry that you still might not be in compliance with federal laws. Okay? So, if you're nationally chartered and you're in compliance with federal rules and regulations, you know you're in compliance with state rules and regulations. All right. Now, you know banks can be really profitable despite all these regulations. That's why the stockholders are willing to be involved in a highly regulated business because it's very profitable. All right. So state charter. Typically doesn't cost as much. The process doesn't take as long to get chartered. They don't have to join the Federal Reserve System, whereas national banks do. Okay. They are regulated by the FDIC. If there's certain services that the Federal Reserve offers that a non-member bank wants, they don't have to pay to join the Federal Reserve System, but they can pay for unbundled services. They can say there's one or two things that we need to have done, and it's a lot cheaper for us to pay for those one or two services than it is to pay to join the Federal Reserve System. Okay? All right, we know all national banks are in the Federal Reserve System. Some states allow the bank to lend a higher percentage of its capital to a single borrower. Okay, and again, that has to do with loan limits. It has to do with taking risk. Okay, so the federal rules are more stringent. They're more risk averse. They're not going to, there's an old saying that if you owe the bank a little bit of money, the bank owns you. But if you owe the bank a whole lot of money, you own the bank. That's what this is talking about. They don't want banks to get in trouble because they've made very large loans that could really damage the bank if they go bad. And then the bank says, oh, we're not going to stop lending to you, because if we do, we're going to have to inform our stockholders that we're going to take this huge hit. So we're going to be stupid, and we're going to take even more risk in the hope that we can avoid this failure. Not a good strategy. You know, I'm not sure what in the world this means. So, because I don't know what this means, that is an opportunity for some resourceful, ambitious student. So who wants to make a little presentation about services that state banks may offer that national banks don't? Anybody interested in doing that? Noah, all right. Oh, and by the way, I need for each person, and you're on your honor, don't be sending me fraudulent claims of making the presentations. If you've made a presentation, then email me so I can add your points to the test, because I haven't done that yet. So, you know, don't be sending me some email saying I did this and that, and I know it's not true. Grace hasn't said anything yet, and she might send me an email said I made a long presentation about something, you know. So I don't. Bennett might do the same thing. David Reed, Ashy, they haven't made any presentations. All right. Okay. So of course, the reputation of the people who are applying for a charter is important. You know, are you a business leader? Are you a known person in your community? Reminds me of when Michael Corleone. Who's Michael Corleone? He was Don Corleone's son. Have y'all not seen The Godfather? Who has seen The Godfather? Okay. In Godfather 2, they move out to Vegas and they're applying to open a new casino. And a senator has to sponsor that application. And the senator extorts Michael Corleone and says that he'll sponsor him, but only if Michael pays him off. So they slip a little drug in the senator's drink, and then they get him in a room with a girl, and they cut her throat, and she's bleeding everywhere, and they take pictures of it, and the senator is out of it, and then they show him the pictures the next day, and they get what they want. So there you go. You got to be a known, reputable person. Now, how many How many Hardy professors have told you that story? There you go. You learn a lot from Dr. E. All right. If you didn't like that story, please don't call Dr. Burks. Come see me after class. Hey, I didn't make it up. This is, this came out of the mouth. All right. Let's see. So some of the things that the regulators are going to check off their list, they're going to look at the population and the geographic boundaries of the market area. Okay? Want to see what the competition looks like in that area. So the competition could come from banks, from credit unions, from finance companies. Okay? They're going to ask what you're going to do that might be unique and special. What needs are you going to address that are not currently being adequately taken care of in the market? Okay? When I moved up from Little Rock, banks opened in Little Rock at 8 and closed at 5. And I moved up here and banks opened at 9 and closed at, I think, 3 or 4. It was crazy. You talk about bankers' hours. It was crazy. I think some of the banks still operate that way. And Simmons, I think their lobby closes at 4, but you can go through the drive-through until 5. All right. So what is this about? The number, types, and sizes of businesses in the area. What is that about? Why is that important? Do what?
Who are you going to lend to?
Yeah, your customers. Those are your customers. Okay? They want to make sure that you've got some customers to loan to. Okay? Traffic patterns in the area. If you're proposing to put up a unit bank or a branch, will enough people see it and have access to it? Okay? Can they get in and out of your branch? Okay? What's your plan? They want you to be successful, yeah.
This is kind of back to what you were talking about, the hours. I'm just curious, do you have any idea why a lot of banks close so early? Because, I've always wondered, because people don't get off work. Like, a lot of people, some people are 8 to 5 or 9 to 5, but they still wouldn't be able to make it to the
Right.
bank if they needed to. And it doesn't matter as much anymore, but when other people are actually willing to see bank tellers and stuff, why would they make it really hard for working people to go and get services?
I think some of it has to do with the reconciliation that has to be done at the close of business every day. The bank has to reconcile its books and make sure that it has enough currency in the vault and enough capital on their balance sheet to meet their reserve requirements, and they have to do it every night. So, if they close, if it takes an hour and a half to do that, and they're going to let people off at 5 o'clock, they close at 3:30. I think that has a lot to do with it. So that's a requirement. If you own a small business and you don't have to do that, you shut the door at 5 o'clock and you go home. You're done, and you don't stop working until same. I guess it's similar to like a restaurant. You stop serving it at 8 or 9, and it's going to take you an hour and a half, 2 hours to clean the restaurant. And so some of the people can leave, but other people are going to have to stay until 11 to make sure the restaurant gets cleaned up. And so it's the same thing. I think they were trying to give people enough time to close the books. And I'm sure the Federal Reserve and the state bank, the state regulators have a time limit as to when you have to report your reserves. All right. Okay, so what are the trends in population growth and with income? Okay, and this kind of looks like a checklist for any business that is thinking about opening. Will you be successful? Checking on, is there a good location? Are there people there who want to buy and can buy? There's a lot of competition. Okay. So they're doing all these demographic studies to show, to prove that they have a customer base there. And the customers aren't being taken care of adequately. There is a need for another bank. Okay? All right? If the regulators are going to take a look at the history of openings and closings in that area. This is all aimed to make an educated guess on whether to approve in a charter. Okay? Okay? Who is the stockholding group going to be? Okay? And again, I've seen this happen several times in my career, where well-known entrepreneurs approached their friends who they knew had resources for the purpose of getting them to capitalize a bank. And they put together a limited number of people who threw in $50,000 apiece, started the bank, and on the first day after the 5-year anniversary of the start date, they sold the bank. Okay? All right, what amount of stock will be held by directors and officers? They want to make sure that they have loyal employees who have a big stake in this game and who are going to stay there and operate this bank. Okay? All right. How experienced is the management team? Again, this is like a checklist for anybody who's going to make an investment in a private business. Okay? Okay, so let's see your forecasts. And based on your forecast, do you have adequate capital? And what happens if you're a little bit short? What happens if things don't go as well as you are forecasting? Do you have enough capital to make up the difference, keep you operating? Everybody up with me? Any of you guys wanting to go in and start your own business, this is a good list. This is a good checklist of the things you need to consider. Doesn't matter what kind of business it is. All right. So 100 new banks a year, on average, being formed. Okay. And again, there's a cycle of consolidation, which then leads to, anytime there's a consolidation, there's a vacuum at the local level, which is then filled by new banks, which are then sold later on. All right. Not a shocker that as people congregate, there's a higher need for financial institutions. Okay? So I guarantee you it'd be interesting to see how many new banks opened in Nashville over the last 5 years. And I don't think it's a stretch to say that Nashville has exceeded the national average of new bank openings.